traders, what's good? So today's, well, I say today, this lesson is about risk management. All right, so I'm gonna do some trading psychology after this one, but this one's gonna be about risk management. Let's go through some golden rules. Yeah, I'm just gonna lay them out there. So the first rule is always risk 1 to 2% per trade of your total account balance. Why is that? Because never risk more than 1 or 2% of your account on a single trade. This keeps you in the game longer, even if you were a losing streak. Okay. The second thing is set a stop loss for every single trade. Always use a stop loss. It's your safety net that automatically cuts you out of a losing trade before the damage gets out of hand. The third thing, use a fixed risk to reward ratio. So, stick to your risk to reward ratios, like risking 1 or 2 or 3. No, never 3. Fuck that. Risk 1% or 2% to, make 2 or 3 times that. We'll talk about that a little bit more in a minute though. Don't over leverage your account. So leverage can make you money fast, but it can also wipe you out even faster. Keep your lot sizes small, especially when you're just starting. Don't revenge trade. Losing sucks, but don't chase your losses. Revenge trading is emotional trading, and emotional trading leads to blowing accounts. Plan your trades before you enter, so know exactly where you'll enter, where you'll exit. That's literally what we just covered in entries and exits. How much you're risking before you click buy or sell. No guessing, just a straight up structure plan, like robotic basically, okay? Avoid trading during high impact news. This one's really important. Should have mentioned this earlier, but news events can cause wild market moves. If you're new, it's safer to just sit it out during major news announcements like interest rates or job reports, okay? We're going to go over that a little bit though more. I'm going to show you Forex factory and stuff and how to know when it's going to be a bad day to trade, okay? Withdraw profits regularly, so treat your profits like real money because they are. Don't leave everything in the account. Secure the bag by withdrawing regularly, yeah? I hope I'm saying that right. Use a trading journal. Track every trade. Write down why you entered, what went right and what went wrong. You should be doing this at the beginning. This is how you learn and grow as a trader. And don't force trades. So if there's no setup, don't trade. The market will always be there. Be patient and wait for your edge to appear. All right. So by saying all of that shit, all right, probably sounds like total gibberish to you right now as a total beginner. But otherwise, let's get into it. So let's start with risking 1 or 2% per trade of your total account balance. It's that golden rule, risk 1 or 2% per trade. But if you have a small account, say you're putting $100 in an account and you want to make money with it, you want to flip it, whatever, right? You want to make that $100 to $200 in a week. It's so possible. It's pretty easy actually. But are you going to be risking 1 or 2% of that account? No, because that's $1. What are you going to make with $1? Risking $1 to make $1? It doesn't make sense, all right? So what you're going to want to do is be risking $10 to make 20 or 30. It's high risk, but look, it's a little bit of money. $100 is not a lot of money. And I'm not saying that to be a dick because I started with the same amount, right? I started with really low amount of money. That's what we all do. We get in the game to try and get rich from a small amount of money. We're broke and we want to get rich. I understand. But that's why prop firms are the best way to go if you've got a small amount of money. So go and get a prop firm challenge with your $100. And then you can risk 1 or 2% because you're probably going to be able to get I know for a fact with $100 you can get a 50k top step combine challenge. Doesn't mean you got a 50k account, means that you got a $2,000 account really, because that's the maximum you can lose before getting booted out. The target is $3,000, so I'd say go get like a combine. And I'm just using Top Step as an example, even though I really don't fuck with them anymore. But that was my own, my own fault. The way I trade, too aggressive. But listen, I'm not getting into that. You basically just want to go and get a prop firm challenge with your $100 and then risk 1 or 2% because you've got more money to play with. That's the point I'm getting at you. So, and it gives you good discipline. It teaches you good things as a trader because you can't break certain rules. So, yeah, I advise you to take your $100 and go get a prop firm challenge and withdraw money. Literally make your money and withdraw that fucking 80% split that you get and start saving and put it into a personal account. So that's the risk 1 or 2% per trade thing out of the way. The next thing is stop losses. So as a beginner, or actually really as a trader, you should be using stop losses. Solid take profits, you don't need to. I'll teach you in a minute on the charts. I'll just quickly go to the charts and show you how to trail your stop loss and when you should move your stop loss to break even. So let's take a little look at stop losses and why they're important. So let's just say, I got in on this big engulfing candle, stop loss there. So I know now I can go about my day, whatever, and if price comes down and stops me out, I'm all right with it, because I know what I'm willing to lose. I get into a trade thinking I'm going to fucking lose, yeah? Like, I don't get into a trade and go, I'm going to win. No, I get into a trade hoping I'm going to win, but knowing full well there's a big chance that I can lose. So, stop loss there. Boom. And this is how I intraday trade. I do trade London session, way different to New York session. Now, New York session, I don't even use a stop loss anymore. But that's just how I trade, because I'm in the trade for seconds. I know the rules, I know the risks, okay? But prop firms don't like that. So we got our stop losses, we got to take profits. Now, I say move your stop loss to break even when you're at a 1-to-1. So say this is my stop loss. This is what I'm willing to lose. Now, this is a 1-to-1 risk to reward ratio, meaning I'm literally, if I'm risking $50, I'm making $50 because it's 1-to-1. Now, is that sustainable in the long run? People say no, but it can be if your win rate is super high. So if you've got a strategy that's really fire for a 1-to-1 risk to reward ratio, like a breakout strategy, for instance, on the New York Open, that's for 1-to-1s, depending on how much you're going for, it's pretty high reward. So this is a 1-to-1. I'd move my stop loss to break even as soon as I get 1-to-1. So boom, there you go. Now I'm at a break even trade. Now, my next target would be somewhere up there, structure. And I'm only going to move my stop loss when price is giving me structure, okay? So I'm just going to keep moving my stop loss. Say this is my stop loss down there. I'll just turn it red. So this red line is my stop loss. Every time we get a pullback and make structure, I'll move my stop loss up. Move my stop loss up. And then eventually, of course, it's going to come down and stop me out. But it's okay because I've secured profits. I'm moving my stop loss, trailing my stop loss as I make structure, okay? It's simple, literally. But using stop losses is fucking a must for smart traders. And I'll tell you why I don't use a stop loss. Let's just say why I don't. Because in New York session, when it's New York session and I'm trading NAS US 30, of course I'm risking it, all right? Listen, I'm risking it. So let's just go to NASDAQ today. New York session has already been. Right, so I just realized, because I'm using a fucking stream deck, I've just realized that I was talking all that time and showing you an example all that fucking time, and I wasn't even on the chart. I didn't even click chart. I wasn't on the chart. I was just here talking. Oh, fuck me. Oh, shit. Here we go. Here we fucking go. Now I'm on the charts. Oh, my days. Let's go back to NASDAQ. I can't believe that just happened to me. Oh, fucking hell. Right. Right, here we go. Let's get to the New York session. Bloody hell. Right, quick example of why I don't use stop losses. Because I'm pretty experienced now as well with these pairs. Now, I'm looking for, support and resistance. Looking for support and resistance zones. And I'm looking for just before that 2:30 time for me, because that's the 9:30 Eastern time. All right, for New York. So I'm looking for breaks. I always draw my lines like this. And go watch my YouTube videos. You see I'm telling the truth. So I get faked out quite a lot, all right? So here we go. Pretend I'm waiting for the open. Okay, boom. No fake out. Perfect. All right, no fake out. That's lovely. Actually, today, I wouldn't have been faked out. I'd be in. Now, believe me when I say my stop losses are tight. So fucking tight. So, literally like this. 14 pip stop loss. Yeah, it would be like that for me. That's my 1-to-2 right there. Sometimes I go for 1-to-1s. I just go with the flow when it's NASDAQ and US 30, because I understand how volatile it is and how it goes up and comes down and sweeps people out and shit, but I'm just in on that 2:30 open because I'm in the UK, 9:30 Eastern time. Boom! I'm in and I'm out. I ain't lying. Go watch my YouTube videos. You'll probably see me make $1,000 per day, like maybe more sometimes, maybe a little bit less. But if I did get faked out, just say it went the opposite way, and you know, it just came down instead and wicked me there, and then came back up. As soon as I see myself go into like £500 negative in the red, I just close manually. Is that dangerous? Yes, because it could just shoot back so fast that it eats my fucking account, and I know that. But I'm taking a risk, all right? And it haven't happened yet, touch wood. But it could. And that's why I'm going to teach you about trading news events and why you don't want to be trading news events with pairs like NAS 100 and US 30, right? Or pretty much any pairs, because news events on the 1 minute and 5 minute time frame are lethal. Okay? So, what happens after I get my little boom? Look at this, straight up. This is what happens. Liquidity sweeps everywhere. So that's why I'm in and I'm out in seconds. I trade London session way different. I got like a smart money concepts strategy for that, which I just keep to myself. But everybody in the academy is going to be trading now with me, okay? And it's simple and it's easy and it makes me fucking loads of money. So that's that out the way. Now, what is next on the list? Use a fixed risk to reward ratio. Okay, so using a fixed risk to reward ratio, what does that mean? That means that if I'm risking $50 to make 100, I'm 1 to 2 risk to reward ratio every time. So, you know, if my risk to reward, if I'm, it depends what kind of trading strategy you're using. You know, if you're using a breakout and retests, let's go to the charts. Let's take a little look. Let's say we're doing a break and retest strategy. We got a little support zone now, you know, where price has been rejecting from. Let's get a retest. All right, cool. Let's just get in with there. Nice little golfing candle. Target the structure. Now this is a fixed risk to reward ratio. Go for a 1 to 2. We gotta put it there. Now if I'm fixed to risk to reward ratio, I have to let this trade play. Like I basically have to let this trade play. There we go. It's a winner. Now, that means every time I take a trade, I'm trading break and retest and putting my stop loss below structure. Now, if the structure looks too far away for me and it doesn't make sense, and I think, right, my one, like say it was this. Say I had to put my stop loss there. And my risk to reward ratio is 1 to 2. That looks really far away. Like, am I comfortable in waiting that long? No. But if I put my stop loss there, below this little bit of structure, my 1 to 2 is literally there. So am I comfortable? Yeah, cool. Not too far away. So that's a fixed risk to reward ratio. You got to do it every time. Now, I don't fix risk to reward my ratios. I mean, does that sound right? I don't use fixed risk to reward ratios. I go with the flow. I always try and double my money at least, yeah? But I'll take what the markets give me when I'm trading New York session, because that's just how it is with NAS and US 30. You'll learn that if you stick around. But if you're trading with trends and market structure and stuff, you know, fixed risk to reward ratios are fine. But yeah, figure out what kind of trader you are. Like, are you comfortable holding for a 1 to 3 every time? Like, because if you are, then you better start taking partial profits, you know, partially closing bits of your trade when you're at like 1 to 1s and 1 to 2s, right? If you're going to let it run. But a 1 to 2 risk to reward ratio is absolutely fine. And I've been profitable with a 1 to 1 risk to reward ratio, okay? Because you're going to have a higher win rate. Understand that. If you're risking 50 to make $50 every time, you're going to have a higher win rate. You are. It's just facts. But you're also going to be looking for more trades. And, you know, looking for more trades is not necessarily going to make you more money. It's actually going to lose you more money because you're going to think you see trade setups everywhere. So having a trading plan is so important, right? Having a trading plan is so important. I know exactly what I'm doing on New York session, what I'm looking for, what pairs I'm trading, what time I'm trading. And I also know exactly what I'm doing during London session and what pairs I'm trading and what I'm looking for. So I got that shit down to the T and I'm strict by it. And if I don't see my confirmations, then I'm not getting in. But New York session's a little bit more of a, you know, go with the flow. strategy, I'd say, because breakout trading, man, you got to take what you can. And yeah, what was we talking about before I started rambling? What's next in risk management? Don't over leverage your account. All right, cool. We did kind of go over this in leverage, but let's go over it about leverage. So basically, this is what do I agree with that anyway? Don't over leverage. Why did I write that? Right, fuck it. Yeah. So if you've got £10,000 or dollars to start with, you can use like 1 to 30, 1 to 50, or 1 to 100 leverage max, okay? It's fine. You've got quite a bit of money to start with anyway. But if you're trading with $100 or $200, right, like most beginners usually are, a $500 leverage is fine. Use $500 leverage. Like, go with a good broker. Do your research, see if they're rated highly and stuff, and use 1 to 500 leverage, right, with a small account. Just understand, just because you've got a 1 to 500 leverage, don't be risking $50 if you've got $100 to play with. Risk $5 or $10, because then you can see a nice little bit of profit in a day or in the week after trading, because you got more money to play with now. Even though it eats into your money faster. I was scared of 1 to 500 leverage at the beginning because of people saying, oh, 1 to 500 leverage, man, for beginners is ridiculous. That's how you blow your accounts and shit. Nah, I don't fucking care. I don't even use a Forex broker that doesn't offer 1 to 500 leverage now. I just don't. Like, I need 1 to 500 leverage for me, because, yeah, they might offer me loads more money. And if I do put 10 grand in an account now, when I put £10,000 in an account, I still use 1 to 500 leverage, because I don't risk that 10,000 in a fucking trade. I don't even risk 1,000 in a trade. I'm risking a couple of £100 to make, triple or double or whatever it is. All right. So just still manage your risk with a 1 to 500 leverage account. It gives you a lot more money to play with. I think it's a blessing. Obviously, it can be a curse for stupid traders though, who think, I got $100, I'm going to risk 50, because if I risk $50 now and I hit a 1 to 10, do you know what I mean? No. Think smart, man. Don't be scared of leverage. Just use it properly. So still risk low amount. High leverage gives you the potential to risk a lower amount of your money. You know what I mean? And make it work. So yeah, leverage. That's all I got to say on leverage. What's next? Accepting losses as part of the game. Now, I feel like this is trading psychology. I don't know why I've put this in risk management. Should I use it for risk management? All right, I'll just quickly give you some tips on it, but I'm going to use this actually for trading psychology. So accepting losses are part of the game. And this actually does come under risk management too, yeah. So, this is going to make me fucking go back and feel them emotions. I remember being a beginner trader. Every time I took a loss, it was like I had to get that money back. Like, oh no, I've just lost $20. I need to get my $20 back and some more, because now I'm in drawdown and my account looks bad. Oh, my win rate's bad. Fuck, I'm seeing red. Don't worry about it. Losing is part of the game. I've lost 5 days in a row. Maybe more. I've lost a week or two in a row sometimes, and I've still managed to recover my account because I didn't go off the rails. I didn't start pushing buttons, revenge trading, sweating, feeling emotional, crying about it. I know when I put money in a trading account that I'm fully accepting that I could lose all that money. Don't put money in a trading account that you can't afford to lose. Because if you can't afford to lose it, why are you putting it in a fucking trading account? Because you want to make money, because you're broke. Not in a bad way, come on now. It sounds terrible, but I was broke as fuck too. Put in my last $100 or £100 in an account and hoping to make 1,000. And, this is the way out this time. I've got it under control. I'm going to be rich. Come on. You need money that you can burn. You literally need money that you can throw away, because that's what you're basically doing when you put it in a Forex account. You're throwing it away until you make money and you withdraw it. So yeah, accept losses as part of the game. Fucking write that shit down. Go through the pain, go through the hurt, because you're going to, no matter who you listen to, it's part of it. You need to go through the pain. I'm sorry. Always plan your trade before entering. Right, that's a stop loss and a take profit, basically. That's entry work. We just went over that. Using fixed stop losses. risk to reward and all that stuff. That's basically, yeah. I don't know why I keep writing stuff that I wasn't thinking this through when I was writing it down. So yeah, always plan your trade. Basically, yeah, you need a trading plan, and that's why I said I'm going to give you 3 little bonus trading plans at the end. All right. So avoid trading during high impact news. This one actually counts. So let's go. So this is forexfactory.com. Now use it. Use forexfactory.com every single day. Come on Forex Factory and understand when you see red folders, it's going to affect the pair that you're trading. So if you're trading the Aussie dollar or anything to do with the Aussie dollar, when you see a red folder and the time that the news comes out, stay away from that. Stay away from it. Unless you're already in a trade and you're deep in profit, stay away from it. Don't be trying to open trades when this news comes out because it's fucking ridiculous. 130. USD had core PPI. Don't worry about what it says, unemployment claims, all this stuff. Just understand that these red folders mean volatility, crazy spikes. Like, all right, let's go to a USD pair just to show you. 130 today. Let's look at how price acted at 130 today on NASDAQ. Okay. There it is. That's what happened to 130 today. Right, so as soon as the news came out, boom. Now, is that a good thing? Yeah, I mean, if you can catch it, that's cool. Cool. But it could have easily done this big move and went boom, straight back down and melted to the floor and stopped you out, took your money, whatever. And also, not to mention as well, I should mention spreads. Remember when we was talking about spreads? So let's just run it back to before the news, all right? And let's just say these 2 lines I draw now are the spreads. So you remember now what spreads are. So this is how wide the spreads would have been before that news event came out. Now, as soon as the news comes, it might look good, but the spreads was probably this wide. No word of a lie. Ah, fucking hell. Should be on sleep mode. I am back. Let's get back to where I was. So yeah, spreads widen. Spreads go massive. They do all of this crazy stuff when the news happens. So you don't want to be in trades when news events happen. Red folders, Forex Factory. So that's just a tip for you, right? Plus, if you're trading a prop firm challenge, you're probably going to fail if you're trading news events. So yeah, don't be trading news events is the bottom line to that. Unless you're like a swing trader and you've been in the fucking trade, you know, since down there. You got in your trade down here somewhere, and now you're all the way up here. It doesn't really matter because you got in down there. So, you know, that 130 news event would have done nothing to you. Like, it really wouldn't have. So, yeah, look, where's that 130 news event? You can't even see it. It doesn't even matter. So that's the only time you can really be in trades, when there's news events, if you're already in them and, you know, you're deep in profit. So what's next on my list for risk management? We're flying through this, right? Withdraw profits regularly. Yeah, withdraw profits regularly. So withdrawing profits is so key. Like if you're on a prop firm or if it's a personal account, doesn't matter. If you're on a personal account, you put $100 in, you made $100. Take $50 of it. Just take $50 of it and put it in your bank account and say, right, I made $50 fucking dollars. Like, I made 150. Now I've took 50 out and I'm still in profit. I'm up on my account and I've still got money in my bank. So bank a little bit of money always. Yeah. I'd say leave a cushion. Always leave a cushion. And if you don't know what a cushion is, it's just it's profit. Just leave your account in profit. Don't always go back to zero, or don't always go back to like step 1. Leave a cushion and build it slowly. And if you're trading a prop firm challenge and you pass and now you're getting payouts and they're offering you 80% with profit splits, say you passed a 50k top step combine challenge, you've made $2,000 in profit, right? You can withdraw 80% of it or whatever. Just withdraw $1,000 and leave 1,000 in there, yeah, and carry on going. Don't be sucking the account dry, you know what I mean, and then doing another challenge. Just look after yourselves, look after your accounts, get regular withdrawals, level up. That's what we do, we level up. So yeah, take some money, spoil yourself, and yeah, understand that it's real. So the next thing we want to talk about is use a trading journal. All right, so now I don't use trading journals. I'll be absolutely brutally honest with you. I don't journal my trades. I don't sit there and think, I'm going to journal my trade today. I'm going to take photos of what I've done. I mean, I kind of do because I have a community where I post wins and losses. I just do YouTube videos and shit. So that's kind of me journaling my trades. But at the beginning, I journaled everything. Like, here's my book. I have my book. I have my book. So, you know, like, I journaled everything. My wins, my losses, my strategies. I was just journaling because it made sense. I was learning. I'm going up in the ranks. It's like, how do I explain it? Trying to find a way to explain this. Journaling at the beginning is important because you can go back, you can read it, you can learn from things. I mean, even if you're just screenshotting your trades, just screenshot your trades. If you're lazy and you can't be fucked to write everything down, like the old-fashioned way, which I do advise to write, though, because when you write, something happens to your brain, you know, it sinks in more. But anyway, it's 2025. People are screenshotting shit. So screenshot your trades, your wins, your losses. You know, did you stick to your trading plan? Did you go against your trading plan? Are you risking more than you usually would? You know, all of these things, because trading needs to be systematic and you need to be robotic. You need to approach it like a fucking robot, like an actual algorithm robot. You gotta like wake up, you know what you're doing, you know what you're looking for. If it isn't there, you're not trading. End of. It's not about, I need to make money today. Because if you're thinking that way, you got a lot to learn. Sorry, you got a lot to learn if you're thinking I need to wake up today and make money. Because I know this sounds like this is trading psychology again. We're not even there yet. But look, the faster you try and get to the bag, the quicker the bag runs away from you. Just relax, chill, focus on actually making good trades, not money. Focus on making good trades because the money comes. Like, the better trader you become, the more the money comes. So the money's like, you're trying to make money, but you're not trying to trade well. You're just trying to make money, and you're switching fucking strategies and this and that. You need to just focus on becoming a good trader. Fuck the first 5 years of your trading journey trying to make money. Just the first 5 years should be focused on purely making yourself a good trader. And you know what's going to happen? You're going to be profitable before 5 years because you focused on becoming a good trader and not making money. And the money part just came with becoming a good trader. And the last thing I'm going to say on this risk management video is don't force trades. And I kind of just said that when journaling. Don't be forcing trades. So if you look on the charts today and there's no break and retest and an engulfing candle, if that's your strategy, why get off the charts? Go, leave, go play the game, go, I don't know, fucking walk the dog, exercise if that's your thing, right? Yeah, I'm laughing because I remember learning all of this stuff from my mentors, and now I'm teaching it, and it feels crazy. It feels crazy. It feels good though. But I hope that I'm doing a good job. But this is just for beginners. I feel like I don't want to be too harsh on you. You're gonna make mistakes. You're gonna, you know, fail so many times. And it's okay. It's absolutely okay. But wait. No, that's my psychology rant. I gotta stop because I'm going into psychology. Don't force trades. Make a trading plan. I'm going to give you 3 bonus ones anyway. If you don't want to choose one, that's fine. Go find one. I'm just here to teach you the basics. But you get your confirmations, and if you don't see every confirmation, which, you know, you only need 3 max, then you ain't getting in a trade. Let me just give you a quick example again. Support, resistance, breakout line on structure, breakout line on structure. If it doesn't get a break and then a retest and a bullish engulfing, you ain't buying. And if it doesn't get a break and a retest and a bearish engulfing, you ain't selling. There's an example right there. So, and if you do sell and you win, or you do buy and you win and all your confirmations wasn't there, you should still feel shitty about it because you didn't stick to the fucking plan. So how many times is it going to work out for you? How many times are you breaking your rules? Is it going to work? At least if you break your rules, at least if you follow your rules and you still lose, you followed your rules. Do you know what I mean? Like, it's okay. Losing is so part of the game you don't even understand. I can't wait to get into the psychology rants now because I got some fucking shit to get off my chest for you. I got you covered though, so just take it all in. I love you all. I'm sorry if I sounded a bit harsh on this risk management shit, but it needs to be told. So I'm going to end this video now and get into some trading psychology for you because I'm kind of already in that zone.